Good morning, America. My name is Richard Ciuzio, and we are live on the Phoenix National Network. I'm here to talk to you today about VA loans, veteran loans, and their benefits. First off, I want to just take a moment and say thank you to all the servicemen and women out there who have fought for our country, defended our country, and who are still providing a service to protect our freedoms and our constitutional rights. So, I hope everybody had a happy and safe Independence Day weekend and are still staying safe. And I just want to take a quick moment to acknowledge all the servicemen and women who are either veterans or still active military and reserves or Coast Guard, National Guard, and just say thank you. So, take a moment of silence here. All right, guys. Thank you very much. Listen, that being said, once again, my name is Richard Ciuzio. I am a loan officer licensed here in the state of New York, New Jersey, Connecticut, and Florida. I'm based out of Elmsford, New York, and I live in Yonkers. So, if you have any questions at all, our first-time home buyers looking for a pre-approval, just want to save money, maybe doing a refinance, simple rate and term, or maybe you need some cash out for debt consolidation, renovations, vacation, college tuition, whatever it may be. Give me a call. I offer free consultations, and my services are free of charge. We don't get paid until the bank pays us. So if you have any questions, please feel free to reach out. You can reach me by email, richard.cusio at hudsonunited.com, or you can reach me on my cell phone, area code 321-634-2552. So that being said, for all those who are tuning in, thank you very much. If you haven't downloaded the app already, please feel free. You can do it on the Play Store or on your iPhone. You can see us on Facebook. You can watch us on YouTube, on your Amazon or Roku devices just by downloading the Phoenix National Network app. I'm going to jump right in today and talk about VA loans. It's Independence Month, so I wanted to talk about VA loans, and I wanted to because there are a lot of servicemen and women out there that haven't utilized their VA loan or don't know about their VA benefits when it comes to buying a home. Um, there are a lot of veterans and active duty service members out there, military reserves, National Guard, like I said, that don't know about their benefits after their stint in the military, after their terms of service. So, in order to qualify for the VA loan benefit, a member of the regular military, whether it's the Army, the Navy, the Air Force, or Marines, must have served active duty in order to qualify, must have served active duty for 90 consecutive days during wartime, or 181 days, which is aka 6 months of active duty during peacetime. Um, there has been a new guideline that has been implemented for VA loans last month by Fannie and Freddie for certain members of the Army National Guard or the Air National Guard of the United States who are now eligible for VA home loan benefits. And under this new eligibility criteria, the member must have performed not less than 90 consecutive days of full time National Guard duty, um, of which at least 30 of those days have been consecutive. Full time National Guard duty includes training and other duty in the member's status as a member of the National Guard or state or territory. Full time National Guard duty does not include inactive duties such as monthly drills, and it also does not include basic or initial training. Um, so the expansion of the eligibility is retroactive for current and former National Guard members, regardless of their service dates. So individuals who have applied and maybe previously denied for their VA home loan benefits on or after January 5th of 2021 of this year, we're encouraging you to reapply if you meet the new expanded criteria. So that is some of the criteria for qualifying, but I'm going to go in a little bit more detail on how do we know if you are eligible for a VA loan. So what we do when we're doing a VA loan, we have to acquire two forms in order to run your scenario through the VA loan eligibility tool that we utilize as a mortgage broker, that I utilize as a mortgage broker. One of them is your discharge paper. That's one of the forms that we need for whatever branch of military service you served in. If you're a regular military, then we need your DD 214. And if you were National Guard, then it would probably be NGB Form 22 or NGB Form 23, which these are your reports of separation and your record of service for each period of your National Guard or your regular military. It lets us know if you were honorably discharged, if you were discharged due to injury, if you were dishonorably discharged, et cetera, et cetera. If you are a discharged member of the selected reserve, then what we would need in order to see if you can qualify would be your latest annual retirement point statement and evidence of your honorable service. um, so with that, once we acquire those, what we can do is we can um, go on to obtaining your COE, which is a certificate of eligibility, which I'll get into in just a second. Because another question that pops up a lot is, are VA loans assumable? The answer is yes, they are assumable. But this is on a base to base, loan to loan. It's on a loan to loan basis. They are assumable to a surviving spouse or to a direct descendant of that deceased service member. But the direct descendant, son or daughter, um, also has to be in the military. So, like I said, this is discretionary and it's on a loan to loan basis. Now, let's say you are a surviving spouse and you are in receipt of DIC. DIC is your dependency and indemnity compensation. Those are your benefits. And you would need these benefits when you're submitting the VA form 26-1817 and the veteran, your spouse's DD 214, along with your social security numbers and possibly marriage certificate and death certificate as well, in order to see if you can qualify for these VA loan benefits. I know it's a lot, but VA loans, when there's an assumption involved, it is a little bit more of a tedious process. If you're not receiving the DIC, which is the dependency and indemnity compensation benefits, in order to qualify, you would need a different form. It's a 21-534 form, along with the DD 214, Social Security cards, marriage license, and death certificates. Having all of these documents, depending on what branch of service you're in, what type of loan you're doing, who you are in relation to the VA member, will allow us to grab that certificate of eligibility. The certificate of eligibility, or the COE, is the form that lets us know, us as the bank or the mortgage broker, whether or not you qualify for the VA loan program, and if you are not exempt from the VA funding fee. What is a VA funding fee? That's a very good question. VA funding fee, it's a one-time payment that the veteran or service member or the survivor of that service member or veteran pays on a VA backed or a VA direct home loan. All right. This fee helps lowers the cost of the loan for the U.S. taxpayers, since the VA loan home program doesn't require down payments or mortgage insurance premiums, monthly mortgage insurance, private mortgage insurance. Um, And why do you not have to pay? That's one of the benefits. VA loans, they finance up to 100% of the home. So even if you decide to put a down payment down or anything like that, if you know you're not, technically you don't have to, because it's 100% financing and less than a 20% equity or 20% down payment. On a conventional loan, you would be obligated to pay PMI. However, with a VA loan, you do not. So that's just one of the benefits. So how do you know if you're going to be paying the VA funding fee? Well, if you're using a VA home loan to buy or build or improve or repair a home or to refinance a mortgage, you'll need to pay the VA funding fee unless you meet certain requirements. All right. Some of these requirements include receiving VA compensation for a service connected disability, or if you're eligible to receive VA compensation for a service connected disability, but you're receiving retirement or active duty pay instead, or maybe you are the surviving spouse of a veteran who died in service. or your surviving spouse from a service connected disability, or has somebody who's become completely disabled due to their um, incident that they came across during their military service. Um, Another way would to be exempt would be your service member with a proposed or memorandum rating before the loan closing date, which says you're eligible to get the compensation, but because of a preliminary discharge, but because of a pre-discharge claim, or if you're a service member on active duty who before or on the loan closing date provides evidence of having received the Purple Heart. So those who have received um, high merits of honor in the military are probably going to, are more than likely also going to be exempt from the VA funding fee. I'm not sure about Congressional Medal of Honor, but it looks like Purple Heart is one of them. I would assume a Silver Star might get you there too. Um, you may be eligible for a for a refund of the VA funding fee if you're later awarded a VA compensation for service-connected disability. The effective date of your VA compensation must be retroactive to before the date of your loan closing. Okay. So if you think you're eligible for a refund, there is a phone number you're more than welcome to call. It's a VA regional loan center. You can reach them at 1-877-827-3702. You can reach them Monday through Friday, 8 a.m. to 6 p.m. Eastern Standard Time. One more time, that's 877-827-3702. So those are some ways that you are exempt from the VA funding fee. How do you pay this fee? Well, that's a very good question as well. Usually, you pay your fee through the loan itself. All right, you can pay it over time through the financing of your loan, or you can pay it all at once for to keep your monthly payment lower. You can pay it all at once in one shot at the closing table. It's up to you on what you want to do. If you're not making a down payment, then you got a little bit of extra money to keep the VA fund, pay the VA funding fee off, and keep your monthly payments a little bit lower than what they would be if you were financing that VA funding fee. How much you pay on the VA funding fee depends on the amount of your loan and a few other factors. Maybe what type of loan are you going to be getting? Is it a purchase? Is it a refi? Is it a cash out refi? Is it a renovation? Is it an assumption? But the total amount of your loan, it gets calculated. Everything is calculated, and your funding fee is a percentage of your total loan amount. So whether it's your first time or a subsequent use, second time, third time, whatever it may be, using if it's your first time or subsequent time using a VA backed or VA direct home loan, and that's going to determine what percentage of the VA funding fee you're going to get. So having a once again, the down payment is not required on a VA loan and that's one of the perks. It's one of the benefits of having a VA loan, is the 100% financing on the property and not having to pay PMI whatsoever. Now, in today's market, because it is a seller's market, I'm going to change my background here, folks, for 1 second. I apologize. I want to do a little bit something more patriotic. There we go. Because today's market is a seller's market, it's not a buyer's market. You want to have a strong profile. You want to have a strong offer. You want to have a strong, so you're taken into consideration and taken seriously when you're looking to purchase a house. Now, just because you are doing 100% financing on a VA loan doesn't mean you don't have to put down a down payment. You should absolutely put down a down payment just to be taken into consideration. Now, what happens if you put down a down payment and you qualify for the VA loan? Well, you can get that down payment back at closing. It's like a refund. You get a check back to you at the closing table for the amount that you put down, and you can still finance up to 100%. But in order to be taken seriously, you might want to put down a down payment. I suggest that to all my clients who are doing a VA loan, especially in today's market, unless they're doing a refinance. This is for purchases only. That being said, um, based on the percentage of your loan amount, or how much you're financing. Um, on a first time use for a VA loan, the VA funding fee is typically around 2.3%, which is added to your loan amount. It's not the purchase price, it's added to your loan amount. For a second or subsequent use, it's usually about 3.6% of your loan, which can also, like I said, which can be paid through the loan itself or all in one shot at the closing table. It's up to you. It's the borrower's discretion, whatever you feel comfortable with. So bear in mind that each loan is different. And because each loan is different, the VA funding fee may also differ from the figures I just gave you. So, you know, it depends on if it's assumable, is it a purchase, is it a first time use, is it a second time use? What are the parameters? There 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 are different parameters for every loan. So these percentages might vary a little bit, but really not too much. What types of transactions are VA loans eligible for? Purchases on primary residences, refinances on primary residences, cash out on primary residence. You can do a VA renovation loan. You can do a loan assumption by the surviving spouse. You know, um, these are, it's mostly a primary residence product. What are what are ineligible for the VA loan? Secondary homes, investment properties, co-ops, single wide single wide homes. You can only do double or triple wide with a VA loan, which are usually like not motor homes, but mobile homes, um, and manufactured homes. All of these are ineligible for the VA loan. So one more time: secondary homes, or your vacation home, so to speak, investment properties, co-ops, single wide, and manufactured homes. In fact, co-ops don't do any government lending whatsoever. No USDA, no FHA, and definitely no VA loans. They don't do co-ops. So now that I've gone over some of those, I want to go over a couple more of the benefits to having a VA loan. So some more great benefits to the VA loan is the much significant lower interest rate that you're going to be paying on your loan. You get a great rate because you are a veteran. You served our country. You deserve something in return. And one of these benefits is a lower interest rate, which on average, in my experience, based on your credit score and loan to value, is anywhere from 0.25% to a 1% better rate of a conventional loan. So Joe Schmo over here might be doing a conventional loan for 300,000 at a 3% interest rate, whereas you, Mr. and Mrs. Service person, is going to be doing $300,000 loan but getting a VA benefit. You might be paying 2.25 or 2.5 or 2% on your loan, which is significantly less than he's paying. So this is a huge savings over the life of your loan. It eliminates so much in interest over the life of your loan, and it's absolutely one of the bigger perks for the VA loan benefit. Another one, which is actually pretty huge and significant as well, is a minimum FICO score requirement. It's a lot lower for a veteran. You know, um, a veteran can utilize a minimum FICO score depending on the lender anywhere between 600 and 620 and still qualify for a VA conventional loan, VA loan. Instead of the minimum guidelines for 640 or 680. 640 is probably the least you can go for a conventional loan. However, anything above 680 is you're going to get uh, better overlays, better pricing. You're just going to get better findings altogether. But with a VA loan, you can go as low as 600 with some lenders, but most of them are 620. So that's huge. That's a 40-point difference for a lot of lenders. Um, However, FICO score, the higher the FICO score still plays a factor. The better the pricing, the better the score, the better the pricing. Plain and simple. If you have a 700 or a 720 FICO score, you're gonna get a better interest rate on a VA loan than you're gonna get than somebody else that's doing a VA loan and has a 600 or a 620 FICO. They're still gonna get a very good percentage, but the better the FICO, the better the rate, plain and simple. um, Another benefit is having more leeway. Um, Another benefit with the VA loan is having a little bit more leeway and slack with your with an increased back end DTI, which is a debt to income ratio. All right. Now, on a conventional loan, most lenders will go as high on a VA loan as high as 59.99% on the back end, which is huge. That's more than an FHA. But I have seen some lenders out there that'll go as high as 65% on the back end, sometimes 68. I think saw that once. However, rule of thumb, I like to keep it under 60. Why is this good? Because this is good for somebody that um, who can't afford the down payment. So you're taking advantage of that 100% financing, or somebody that has a lot of monthly debt. So your expenses are a little bit higher on the back end, and you wouldn't fall under a conventional parameter. Why is this a benefit? So on a conventional loan, with a good FICO, 720 or higher, 700 or higher, 680 or higher, the maximum DTI that you can um, achieve on a conventional loan is 49.99%, 50%. All right. So on a VA loan, you're going up to 59.99%. That's a 10% difference. You're getting an extra 10% on your liabilities and expenses with the VA loan. Sometimes more if you can find that lender that does the 65 or 68%. That's huge. That is really, really huge. FHA loan, which is also a government loan, only goes up to 56%. So with the VA loan, you're still getting 3 or 4% higher on that back end debt to income ratio. Your back end debt to income ratio, for all of those who don't know, it's your monthly housing expenses plus all of your other monthly debt accrued. Installment and revolving debt, credit cards, student loans, car loans, medical bills, any collections, anything like that. Those are all taken into account onto your back end DTI. And as long as you fall under that 59.99% on a VA loan, we can qualify you. So those are actually some very good benefits to doing VA loans. You get all the, you get that no PMI, 100% financing, lower FICO, better back end DTI. You get a higher lift on that. You also get a lower interest rate. So all of these are great benefits to utilize, and anybody that has not utilized their VA benefits should definitely do so. If you're looking to buy a home, if you're looking to buy one after you finish your stint of service, whatever it may be, utilize them. The sooner the better. There's one more thing I'd like to touch base and on for the VA loan, and that's the appraisal process of a VA loan. Because the appraisal process, they're unique, and there is certain criteria that's required, and the process is a little bit different from a conventional or an FHA appraisal. There is a MPR requirement. What is an MPR requirement? An MPR, as in Mary Patrick Robert, is a minimum property requirement, and this is for any purchase through the VA loan. And it must meet these requirements. All right. The building or the structure has to be structurally sound. It has to be safe. It has to be sanitary, and it must meet minimum property and local code. The well water must also be tested and required for drinking safety and contaminants. And if there are any, they must be treated. With that stated, there's a lot of people out there who are looking for fixer uppers and are trying to utilize VA loan benefits for these fixer uppers or short sales. Most of the foreclosed homes and short sale homes have major issues that would need to be addressed before you can take possession of any home. And the main reason that they're selling is because they want the buyers to purchase the property as is. They know their house is a piece of junk. So they want somebody to buy it as is and just take it off their hands. So they're willing to sell it for a lower price. However, if you do this and try to utilize a VA loan benefit, you're probably not going to pass the appraisal inspection, because there are, um, there are major issues with these types of homes, and you would not qualify for that VA loan benefit. And I'd hate to see you waste all that time, waste all that money on the appraisal, on the inspection, your down payment, everything else, if you decide to put a down payment down, just to find out that you don't qualify because the home is not structurally sound or meet any of that criteria. Um, Termite inspections are also required on VA loan appraisals. They're required in all states where termites are present, which probably most of them. There's a termite map. I've seen it before. If you're in a termite area or the appraiser thinks that there might be termites, you have to get one. Um, well inspections are also required in all cases and must be performed by a disinterested third party, such as a local health authority or a licensed sanitary engineer. The water The well water must meet the requirements established by the local health authority. If there's no local health authority, then they must meet the state authority. If there's no state authority, then they must meet the standards of the Environmental Protection Agency. You also need to get septic inspections, and those are required if the appraiser indicates the need for one, and those are only good for 90 days. The appraisal themselves are good for 180 days. If you do not close your loan in that 6-month period, you're going to have to pay for another VA appraisal. So, now these septic and well and termite inspections, they're not really required on a conventional loan, or even an FHA. But the VA loan, it's a special loan program. It's a special appraisal, and they have their own criteria. So I would suggest staying away from the fixer uppers on your VA benefit. Do it on a primary residence, and something you're going to get the most value out of. That being said, these benefits are some of the best out there as far as a mortgage goes. I haven't hit all of the criteria for these VA loans because it really is a broad product. And like I said, loan, um, uh, every loan is different, every loan is special, and no two are alike. So, but a lot of these conditions and overlays, like I was saying, are on a loan by loan basis with the VA. And if there's something that pops up, we're going to have to cross that bridge when we get to it. But what I said today is pretty much the basic gist of the VA loan program. So for more information and a free consultation or pre-approval or any other questions about the VA benefits, you can give me a call. You can shoot me an email. I would really enjoy hearing from you and helping you qualify and acquire your future home. That being said, um, God bless America, and I want to thank everybody, all the servicemen and women out there who have put their lives on the line on a day in and day out basis to protect our freedoms and what we believe in most. If there's any questions, film and open it up. If not, guys, stay safe. Enjoy the rest of your summer, and I'll see you soon.